Welcome to Financial News in Review for Monday, June 10th, 2024, your go-to source for concise summaries of the top financial interview shows. We cut through the noise to bring you the key highlights, saving you valuable time each day. In this video, we will be providing important takeaways and insights for the following videos. From Blockworks Macro, we have Secrets of the Federal Reserve's Unconventional Monetary Policy, Advanced Level, William English. From David Lynn, we have Where Did 2% Inflation Target Come From? Ex-Central Bank Chief Explains Origins, Don Brash. In this interview, the YouTube channel Blockworks Macro hosts William English, who discusses the Federal Reserve's unconventional monetary policy, providing in-depth insights and analysis. The core thesis of the interview is the transformative and complex impact of the Federal Reserve's unconventional monetary tools in the wake of financial crises and economic upheavals. William English argues that unconventional monetary policy, notably quantitative easing, QE, and forward guidance, were significant but not panaceas in addressing economic downturns, supported by detailed commentary and historical evidence. Key points discussed by William English include 1. Larger fiscal effects of monetary policy. William English elaborates on the intertwined nature of fiscal and monetary policy, especially in periods of low interest rates. He uses examples from the post-2008 financial crisis and the COVID-19 economic relief measures to illustrate how the two are linked more closely than often appreciated. 2. Interest rate dynamics and government debt. He also discusses how higher interest rates impact the fiscal situation by increasing the cost of servicing government debt. English supports this with economic models and historical references, emphasizing the intricate balance policymakers must maintain. 3. Monetary policy tools and strategies. Additionally, William covers the evolution and practical application of unconventional tools like QE and forward guidance, with examples from the 2008 financial crisis and beyond. He provides a thorough analysis of their intended and actual impacts, including reflections on their theoretical underpinnings versus real-world outcomes. 4. Banking sector responses to interest rate changes. Further, English discusses how banks manage interest rate risks, using historical data and specific case studies like the failures of Silicon Valley Bank and First Republic Bank. William English also makes several key predictions, such as 1. Fiscal challenges and political pressure. English predicts that the significant fiscal effects of monetary policies will continue to lead to increased political pressures on the Federal Reserve, particularly as interest costs on government debt grow. 2. Evolution of the Fed's balance sheet. He anticipates that the Fed's balance sheet may experience a ratchet effect, potentially increasing in size with each recession, if unconventional policies like QE are continually implemented without substantial balance sheet reductions between downturns. In conclusion, William English summarizes his insights by stressing the importance of understanding the nuanced impacts of unconventional monetary policies and the need for careful balancing of fiscal and monetary actions. He encourages viewers to recognize the complexities involved in economic policymaking and to stay informed about ongoing policy discussions. The interview's detailed exploration of these themes highlights the enduring challenges and strategic decisions faced by central banks in maintaining economic stability. Title of the video: Secrets of the Federal Reserve's Unconventional Monetary Policy, William English. YouTube channel, Blockworks Macro. In this interview, David Lynn hosts Don Brash, an influential figure in central banking, who elaborates on the origin and impact of the 2% inflation target policy, which began in New Zealand before gaining traction globally. The core thesis of the interview explores how Don Brash, as the former governor of the Reserve Bank of New Zealand, pioneered an approach to inflation targeting that fundamentally changed central banking practices worldwide. Brash argues that instituting a publicly disclosed inflation target, specifically 0 to 2%, creates a transparent framework that holds both the government and the central bank accountable for economic stability, supported by his extensive experience and the policy's outcomes. Key points discussed by Don Brash include 1. Origins of inflation targeting. Brash elaborates on how New Zealand, in 1989, was motivated to adopt a 0 to 2% inflation target to redefine the relationship between the government and its central bank. This approach aimed to limit political influence over short-term monetary policies and create a more accountable economic environment. Number 2. Global influence and adoption. Brash highlights that New Zealand's success with inflation targeting led to its adoption by numerous other countries, including Australia, Canada, the UK, and Sweden. He explains how other central banks and politicians and economists around the Anglophone world were influenced and adopted similar frameworks based on New Zealand's pioneering model. 3. Implementation and impact. Brash covers the practical aspects of lowering inflation through tight monetary policy and high interest rates, noting that while New Zealand's shift to low inflation involved other economic reforms, the central bank's role was crucial. He details the historical context and the specific measures taken to achieve and maintain the target. Brash also makes several key predictions and observations regarding contemporary monetary and geopolitical issues. 1. Future inflation targets. He predicts that inflation targets will remain central to monetary policy, but emphasizes the importance of consistency and clear communication from central banks to manage public and market expectations effectively. 2. Geopolitical tensions. Brash warns that rising geopolitical tensions between major powers like the United States and China, and international conflicts such as the war in Ukraine, could pose significant risks to global economic stability. In conclusion, Don Brash underscores the importance of transparency and accountability in monetary policy, advocating for clear targets that can anchor expectations and stabilize economies. He encourages policymakers to maintain rigorous frameworks that can adapt to economic changes while striving for long-term stability. The key takeaway from Brash's insights is the vital role of clear and accountable inflation targeting in fostering sustainable economic growth and stability. Title of the video: Where did 2% inflation target come from? Ex-central bank chief explains origins. David Lynn. Thanks for watching Financial News in Review for Monday, June 10th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.